University. You're the head of the economics
That's right.
department and an economics professor. So we're talking today about the economic impact of coronavirus. We've been doing these live streams every day at noon. Of course, you can, you may be watching it after the fact. But send us our questions for Professor Ito. We're talking about the latest Bond film being pushed back because of coronavirus, all kinds of different impacts. So, Professor Ito, start with kind of what is the situation now? Yesterday we saw the Fed rate
Right.
slash.
Right. Well, yesterday the Fed, as you said, raised the interest rate. That is a very important interest rate for us. Then people sort of expected that markets are going to positively react to that kind of policy, but markets went down quite significantly. And today it's coming back quite significantly as well. So
That's good news, yes.
that's sort of good news, but we are experiencing ups and downs quite significantly.
Okay. What have you been shocked at the drop in the stock market this past, I don't know, several days?
The drop we experienced last Friday was the largest ever, so the size was quite significant. But at the same time, on Monday, it went up quite significantly as well. So I'm very much surprised by the sizes.
Explain why that happens.
Yeah.
I mean, there's a lot of manufacturing that happens in China. Things are shut down. Kind of the ripple effect that gets to the stock market. Why are people so nervous and selling?
Right. Well, I think people are very much nervous about how much the U.S. economy can be affected by this virus issue, which seems to be more regional issues until a couple weeks ago. So now we have some, infections going on in the United States. So the issue is approaching us, and it's becoming more of a U.S. Issue.
I had printed off a New York Times article from today about the coronavirus. Will the coronavirus cause a recession? And it says, keep your eye on the barber shops. And the reason that they say that is the real sign of trouble is when companies with no direct connection to the virus start reporting a slump in business. For example, if you stopped going to get your hair cut.
Right.
Talk about, if manufacturing of some products, we've already seen it with Apple iPhones, for example, in China, or Nike shoes made over there. If those parts and what you sell is not happening, then these companies might result in laying off workers, which means those folks who aren't getting a paycheck spend less. Kind of talk about that cycle and how
I think
big it can be.
many companies nowadays rely on what we call global supply chains. So as you explained, a lot of parts and components are being produced in other parts of the world. Then they're assembled and shipped back to the United States. So we are very much dependent on other economies right now. So then, because of this high volatility in the stock markets, meaning, we experienced a lot of ups and downs in the stock markets, companies and people are becoming more less willing to take risks. So in that case, companies may respond to that kind of situation by scaling down their investment.
So when we all hear, the Fed lowered the, interest rate, what does that do?
Okay, the point of that kind of policy is to lower the cost of borrowing from banks. So conceptually, it should make it easier for people like ourselves or companies to borrow from banks. Yeah, because as Mr. Powell says, the rate cut itself cannot really fix the virus problem. But because of the virus issue, many people are now starting experiencing some sort of a stagnation of the economies. So some sort of stimulus policies are very much important. Then the Fed lower the interest rate so that the interest rates on our credit cards, car loans, and mortgages, they can be affected and they can be lower so that we can continue to spend and make investment.
Okay. In my mind, that almost makes it seem like more of a panic when you see the Fed get involved in this way.
Right.
Does that have an effect on the market itself?
It can, because the Fed showed its willingness to contain the situation, but at the same time, the size of the cut was 50 percentage points, which is relatively large, and larger compared to the previous cuts in 2019. So that means that they show their willingness, but at the same time, the action itself means that they recognize that there's a very real threat to the U.S. economy.
Okay, so let's talk about how here in the U.S. You mentioned we just saw right before I brought you in the newsroom the first death in California. I mean, this is on top of everyone's mind,
Right.
even at the grocery store in the aisles. I mean, we've seen the kind of hoarding, buying of
Right.
things. What is this going to do you think, to the U.S. economy?
First of all, the U.S. situation may become like the situation in countries like China, South Korea, and Japan, where schools are shut down and people are told to stay home and work from home and so forth. So if that happens, that can have a huge impact on the economy because people will become less willing to spend and go to places like restaurants and shopping malls because they just try to avoid crowded places. Right. So that can have a negative impact on the consumption. And the consumption itself accounts for about 60% of the economy. So if the 60% of the economy gets negatively affected, then that can mean that the whole economy can slow down.
So, and we saw, here's the printout that I did. There's, what's that guy's name again, Brian? Daniel Craig. Daniel Craig starred in the new James Bond movie. It's supposed to come out in April. They just announced today they're pushing it back to November because there's mass movie theater closures in countries like China, Italy, France. This is the first Bond film in 5 years. They want, the biggest audience.
Right.
But the film industry, some box office analysts anticipate billions of dollars in losses with movie releases coming out in the next few months. So now, the pop culture, even if you've been trying to stay away from coronavirus news, the pop culture people are starting to see the effects.
Right.
I mean, you think of, restaurants, movie theaters. Right. A lot of people can't work from home. Their job just doesn't allow it.
That's right.
Do you foresee job cuts, job layoffs?
It can happen. It can happen. So at this point, I think we are facing a trade-off, whether we want to make our best efforts to contain the virus, or we want to do our best to sustain our economic activities. So, but I think at some point, the U.S. may have to take some actions to really make the best efforts to contain the virus. In that case, the economy would have to let go down a little bit. So that means that we can experience a recessionary situation.
Oh my gosh. You never think, unemployment has never been so low. The stock market has done well, and now here comes this. In
right. If you think about the Oregonian economy, the unemployment rate is very good. The housing market is okay. But if this issue becomes very widespread, then that can affect the behavior of consumers, and they're going to start spending less, and companies will become very hesitant to build things like homes and shopping mall buildings and office buildings and so forth. So that can really spread other parts of the state and the U.S. economy very quickly.
And again, if you guys are watching us live, submit your questions, post them. We're watching them right here. And Professor Ito can answer your direct questions kind of about the economic impact. I want to ask you, what is a local impact of our economy? I just saw a headline of, in Seattle, REI has shut down 3 campuses there. We've heard of an Amazon worker in Seattle who worked at one of the warehouses. Fleer, based in Portland. Kind of talk about some of the locally based Northwest companies being affected.
I think there are 2 issues. One of them is that we have several multinational big corporations such as Nike, Intel, and Columbia. And those productions are very much based on the productions in other parts of the world, especially in East Asia. So again, this is the issue about global supply chains. Then global supply chains are very much damaged in East Asia. So that can really negatively affect the production of those multinational corporations. And the second thing is that in East Asia again, China, South Korea, Japan are very much affected. But those three economies are the largest trading partners for the state of Oregon.
Really?
Yes.
Okay.
So that means that those economies start experiencing slowdown, which they have. Then that can have a huge negative impact on the exports coming from the state of Oregon.
What do we trade with them the most?
Machineries and industrial equipments and all those things. Basically, manufacturing goods, and we also have agricultural goods going to East Asian economies as well.
Okay. So we could see, I mean, folks that work at those companies, there's an awful lot of people who work at Nike, there's an awful lot of people who work at, Columbia, all that kind of stuff.
Right.
Are they going to see an impact with their job, do you think?
Yeah, I mean, in addition to those impact of the supply chain, what if their kids' schools close?
Okay.
So then that means parents would have to stay home. Then some people may have to lose their jobs just because they can't, work from home.
Right.
So that kind of negative impact on the employment or labor can happen in the state as well.
What, let's see, I was just looking through some of these other questions. What do you think,
I feel like Nina's floundering. Do you got
I'm
anything?
just looking at supply chains and, I mean, there's really, no one knows, right?
No one knows.
No one knows.
Well,
No
no
one
one
even knows
knows.
what this virus is.
Yeah, but I think one thing we need to keep in mind is that the U.S. economy accounts for 20% of the world economy.
Yeah.
Then East Asian economies, China, South Korea, Japan, altogether account for about another 20% of the economy. So if the U.S. economy slows down, we have to worry about 40% of the world economy. But if the U.S. can contain the situation as it is, then we would only have to be worried about 20-some% of the world economy. So I think we are standing at the crossroad at this moment. So what's going to happen to the U.S. economy or what's going to happen to the global economy really depends upon how the virus situation will be within the United States in the several next few weeks.
Yeah.
Yeah.
Let's talk about 401ks if you're able to. For the average, working person,
Right.
let's take me for example,
Yeah.
who knows little to none about the
Right,
market.
right.
I have a 401k, I have some stocks.
Mhm.
I don't, buy or sell them hardly at all
Right.
because I don't know what I'm doing.
Yeah.
What does that person do?
Mhm.
Does it really depend on what stage of life you're in? Of do you really need to be worried for younger people? I mean, there's ups and downs, and you just
Yeah.
got to write it out.
In this kind of situation, it's very easy for us, people like ourselves, to become very much panicked about the situation.
Yeah.
So that's the reason why we experience a lot of ups and downs in the stock markets. So, but at the same time, we just need to be very much calm down, because in a situation where the level of uncertainty or anxiety is so high, stock markets tends to be very much volatile anyway. They are very much sensitive to any kind of news. They can react to any situation either positively or negatively. So that means that if you see some stocks prices rising, then you may want to buy those stocks. But on the next day, you never know. Because again, we can experience a lot of ups and downs.
What kind of company stocks are going up? I heard Clorox, Procter and Gamble, because everyone's going on these buying binges. What other kinds of stocks are doing well, do you think?
Well, I think as we have seen this past weekend, some people seems to have started hoarding some goods. So some companies that produce some necessities can get hit. Not hit. I mean, they can experience a rise in their sales just because people are hoarding those products. Yeah.
Max, did you have a question?
Yeah. What are some of the Portland businesses that will be most affected if the U.S. economy were to slow down?
Okay. Well, as I said, I think multinational corporations such as Intel and Nike and Columbia, they can be very much experienced. And especially in the Portland area, we know that how much of our economy are so much dependent on these multinational corporations.
Right.
So multinational corporations really, I don't know how, whether they have some sort of a business continuity plans for this kind of situation. But if they don't, then that means the interruptions of supply chains can affect these multinational corporations. Then that can have a more local impact on the local economies as well.
Is this, and I was just glancing at that New York Times article from today on the coronavirus and the economy, and it says economists do not recommend focusing on the stock market. Why?
Well, because
It's so sensitive,
so
just like you were
sensitive, and the
saying.
ups and downs. So, in that kind of situation, it's very difficult to kind of plan your investment strategy. So that is the reason why many investors started buying bonds, like government bonds. So the price of the government bonds started rising, and as the price of government bonds rises, the yield, which is the interest rate on the government bonds, start going down.
Okay.
Yeah. So now we have a lower long-term interest rate, even lower than 1%, which can be a good news, because if you are planning to buy a home, the mortgage rate, can be lower because they are linked to the government bonds yields. But at this point, we don't know. We have just so much uncertainty.
So you are a professor of economics at Portland State. He's
Yes.
also the head of the department.
Right.
You're not teaching any classes right now because you're doing a
The
lot of
admin
admin
staff,
work.
yeah.
Next semester, or
Right.
you're going to be teaching a class. If you had a class right now,
Uh-huh.
is there, have you thought about, what kind of students would ask you about this time in our history? And, what would you kind of would you use this as a
Of
as a
course,
teaching
of
lesson in
course.
class? How
Yes.
would you what would you
Well,
teach them?
As an international macroeconomist, I must say that as a scholar, I can get excited about this kind of situation.
Right.
And then also my work has focused on the impacts of globalization. Then globalization can or has created a lot of benefits for us. But at the same time, our economies are so intertwined with and interdependent on each other. So one negative shock arising in some parts of the world can just go around the globe and can affect people like ourselves. So the fascination of globalization is something I would like to teach in that kind of course.
This is like the perfect example to
Perfect
teach a
example,
student of, like,
perfect
you have this
example.
area, most people have probably never heard of Wuhan, China.
Right.
Now we all have.
Right.
In this corner of the world, and I just think it is fascinating, like we were talking about before we started this stream, of you can have someone there fly across the world, and it's just a vein, network from there
Right.
of how people travel,
Right.
Across the globe.
Right.
And do business and meet family and all kinds of stuff that we
Yeah.
are so,
So
connected.
the mobility of people, products, parts, and components of machines and so forth, the mobility was so high. But now the mobility is starting to get so much slow because of what's going on. Then a slow motion or slow movements of goods and people can have a huge negative impact on the economy. And that's what we are experiencing. And another thing is that, why do companies have global supply chains? One of the motivations for them is to minimize the size of their inventories, so that the cost of production, the cost of storage can be lower. But because they have such minimal inventories, once a crisis situation happens, then they have just so small inventories. Then that can make it so much hard for them to react this kind of situation. So many companies just are running out of their inventories of parts and components for their productions. So then the Chinese economic crisis was very severe in mid-February. Then now it's coming to the United States.
So is this an argument for the folks who say, we need more of those American goods being made in America? Why aren't Nike shoes made here? Why aren't Apple iPhones made
Right,
here?
right.
This wouldn't be happening,
Right.
Unless there's something that happens in America that
Yeah.
stops that inventory. But
Right.
does this bolster that argument?
Well,
For American companies, at least?
we can be very much panicked and shocked about the current situation, but we also have to remember how much benefit we got from globalization. So companies really minimized their production cost by having a wide, extensive network of suppliers.
Because your phone would cost a heck of a lot more if it was made in California.
So what if we become anti-globalization? Well, that means that the cost of production can be much higher. So the question is, are we willing to pay more for the same goods compared to what we used to pay?
It's an interesting argument, yeah. How do you kind of like spell that out to students, I guess? I mean, do you kind of have them argue amongst themselves? Do you kind of raise the question to them?
Well, I think, I think we still are not really realizing how much intertwined with each other we are. So I think one thing I can tell students is that, okay, let's think about an iPhone.
Okay.
The parts of the iPhone come from so many countries, South Korea, Japan, Malaysia, you name it.
Yeah.
So that means that all those production network is what's really sustaining our economies. So we are very much intertwined with each other. And at the same time, one shock in some countries' financial market can spread to other countries, especially if you are thinking about some bigger financial markets such as the Chinese financial markets. So in terms of financial links, we are very much globalized.
Yeah. Kelly Jones, I see you. Hey, Kelly, thanks for weighing in. She says, yeah, overseas businesses should stay in the United States and we wouldn't have this problem. Let's see. What about, here's kind of a question from Matthew.
Okay.
Would stores no longer take cash because, I mean, it spreads disease? We saw a donut shop in Hillsborough who was bleaching dollar bills, which I have never heard of in my life. Would that cause more people to use credit and debit versus cash, do you think? I mean, I don't even know if that's a question for you. It's just kind of interesting.
What's kind of interesting is that the trust in the dollar is quite strong. Then because we live in the United States, we don't really realize that. But if we are outside the United States, we know how much value people place on the dollar, and then how much they appreciate the usability of U.S. dollars. So I think, ironically, in this kind of crisis situation, the trust in the dollar can even rise because people try to hold on to something they put more trust in.
Gotcha.
Yeah.
Okay. Is there anything else that you want to add that we haven't really touched on that you think is important, or any advice for people?
Yeah, I think, when you think about the monetary policy decision we had yesterday, the Fed lowered the policy interest rate to lower other kinds of interest rates for our credit cards, car loans, and so forth. Then I think the market seems to be wanting even bigger cuts.
Really?
And that can explain the reason why we're experiencing a rise in stock market prices today.
Okay.
But the Fed lowered the interest rate by 50 percentage points to 1% to 1.25, which is already very low. So that means that there's much smaller room for further policy actions by the Fed. Then that means that it is not impossible for the U.S. policy interest rate to become zero or even negative, like what's going on in Europe or Japan. So the policy decisions are going to be quite difficult for people in Washington, D.C. And also monetary policy will become very difficult to implement.
Forgive my ignorance on this. Does this affect the mortgage rate?
Yes,
It
mortgage
does.
rates are more or less linked to the interest rate on things like government bonds.
Okay.
So if the government bonds yield, which are interest rate, go down, then mortgage rate can go down as well.
Is this a time to refinance for people, or
Well,
you don't want to?
If you have a job, then that may not be such a bad idea. But if the climate of the economy becomes so bad, then you may want to take some kind of protective behavior. So in that case, you may not decide not to do it.
Why is that?
Because if you are uncertain about your future income, then maybe you may worry about your own mortgages. Then I think mortgage rates fall low enough, then that can be a good time for you to refinance. But if they don't go lower enough, then it may not be such a good time for you to refinance.
Okay.
Yeah.
Professor Hiro Ito, thank you so much
Thank
for
you so
coming
much for
in. We
having
really
me.
appreciate it. And yes, we're going to be let's see. Carl, we need to make TVs in America. Every TV set is made out of America. Yep, a lot more people talking kind of about that,
Right.
making things American made. But yes, a global economy.
Global economy, that's where we live.
It is,
Yeah.
it's here. Okay, thank you so much for
Thank
joining
you.
us. We really appreciate it. Thank you guys for watching.